Hello everyone. Before we begin, let me ask you one simple question. How many global brands do you deal with every single day? Right from the moment you switch off your alarm on your Samsung or iPhone, then you go for a morning jog wearing a Nike or Adidas shoes, put on your Sony headphones and listen to the Spotify music. On your way to work, you might be driving Honda, Hyundai or Mercedes and use the Google Maps for navigation. You might grab Starbucks coffee on your way. In your office, you might be using Microsoft product on your Dell laptop. You shop on Amazon, you buy apparels from Zara and H&M. You might be doing binge watching on Netflix or YouTube in the evening. You see, all these brands are global. These products are global. The question is, should your portfolio also be global? Traditionally, there have been two routes to invest globally. First, the international mutual fund. However, most mutual funds have stopped accepting fresh investments or have restricted the inflows because of RBI's overseas investment limit. The second option is direct broking or direct overseas investment. That is opening your account with direct foreign broker. However, it comes with its own operational challenges like withholding tax, annual forms and succession related matters. This is where GIFT City comes into the picture. It can give you access to the global investing in a simple and efficient way. But before we understand how GIFT City works, let's first understand why global diversification actually matters. You see, most Indian investors are heavily invested in India, and that is very natural because we understand our economy, our country, and our businesses. But India represents only 3% of global listed market capitalization. Think about that for a moment. If you are investing only in India, then you are participating in only just 3% of global opportunity set. The rest 97% lies outside of India, and it can include global dominant businesses and fast growing sectors such as semiconductors, AI, luxury brands, global consumer products, and rare earth element miners. So, global investing allows us to access those investments and participate in their growth by becoming a shareholder, not just their consumers. The second advantage is country hedge. You see, every country goes through its own cycle: economic slowdowns, policy changes, elections, wars, or geopolitical tensions. And also, there are market cycles. In the world, at the same time, some countries might be outperforming while some countries might be underperforming. Diversifying across multiple countries will help us reduce the dependence on any single country. The third advantage is currency hedge. You see, India is import-driven economy, and Indian rupee has generally depreciated against all major currencies across globe. So, the global investing provides a natural hedge against this currency depreciation and can potentially add to our long-term returns. This brings us to the GIFT City. GIFT City stands for Gujarat International Finance Tech City. It is located in Gandhinagar, Gujarat. It is India's first IFSC, International Financial Service Center. Think of GIFT City as a bridge connecting India and global markets. It allows Indian investors to access global opportunities and it allows foreign investors to access India. The idea is very simple. Create a globally competitive financial ecosystem within India that makes cross-border transactions and investments very efficient and simple. Now let's understand how the outbound fund works. First, an Indian investor have to transfer funds through liberalized remittance scheme to the GIFT City Fund, which is operating under IFSC framework. This GIFT City Fund, on behalf of investor, can invest in global markets and across geographies. So, instead of opening multiple foreign broker accounts and handling all the operational hassles yourself, GIFT City provides you a simple and regulated way to access the global opportunities. Few more points to consider. The minimum investment is 5,000 US dollars and the subsequent investment can be made above $500. There is no entry load and no lock-in period. The exit load depends as per the fund. The tax is handled at fund level. That is, once the investor redeems, he will receive the proceeds net of taxes without any additional tax liability. There is an additional advantage of succession and estate related matters which are much simpler in GIFT City than overseas direct investments. Now let's talk about LRS and TCS because these are the most common questions investors ask. LRS or Liberalized Remittance Scheme. It allows an Indian resident to transfer up to 250,000 US dollars per financial year per PAN. Now many people get worried when they hear about 20% TCS. Currently, there is no TCS up to rupees 10 lakh of aggregate LRS per financial year. Above rupees 10 lakh, there is 20% TCS. It is very important to understand that TCS is not an additional tax, and the TCS paid is available as a tax credit. You can adjust it against your income tax liability or claim it back as a refund. TCS basically affects your cash flow temporarily, but not your overall tax liability. To conclude, GIFT City provides an easy and regulated access for Indian investor to access global opportunities. It provides you access to the global companies, investments across multiple countries, multiple currencies, and operational efficiency. For long-term investors who want to build a diversified portfolio, the global equity can be a very good complement to the Indian equity. Remember, the objective is not to participate in the recent market rally, but to build a well-diversified portfolio that can compound across countries, across currencies, and across economic market cycles. If you have any questions about GIFT City investment, global investing, or asset allocation, please feel free to reach out to us. Thank you for watching.